right? Learning from us, learn to make a consistent amount of money on a month over month basis that can significantly change the supplemental income that you receive or potentially become your primary source of income if that is your aspirations. We can teach you that. We even have a program at the Dorian Trader that if you give us 12 months, you meet with me one time a week for 1 hour for 12 months. Now imagine that. And you get all the things that are included in our trading club that we meet every so you've just set yourself up with a 10% return in 48 days if this expires out of the money. And you have at least a 93% chance of winning at expiration on this trade. In this video, we're going to discuss what we call here at the Dorian Trader our bread and butter strategy. This is my favorite topic to discuss, and it's my favorite strategy to execute. You have probably listened to a number of our different videos, and we've been pushing 0 DTE trading, which is day trading with options. We've been pushing 1 DTE trading. We've been pushing 7 DTE type of trading. We've been talking about our better will strategy, which we call the safeguard strategy here at the Dorian Trader. But you probably haven't heard me discuss the bread and butter process that I love the most. It's a swing type of trade that's between 30 and 60 days. I ran a hedge fund for a decade, and this is the primary strategy that I executed was a swing type of trade between 30 and 60 days. What I want to get across in this video is that it's a number of different ways to make money, and you don't have to be on the get rich real fast gratification train, and that's doing a 0 DTE trade, which we do quite a bit on at the Dorian Trader, and I executed quite a bit. Doing a 1 DTE trade, that's a trade that expires in 1 day, or doing a 7 DTE trade. You do not have to be on that train. You can still make a significant amount of monies using a swing trade or longer time frame of 30 to 60 days. We even teach a kind of leap type of strategy that's over 365 days that you can make a living on, that you can be a full-time trader from. Right? So, but my favorite strategy is what we call the bread and butter strategy at the Dorian Trader, and that's a 30 to 60 day time frame. Putting on an option trade, usually a put spread or an iron condor. You can also do a call spread, but most of the time it's a put spread or an iron condor that we're using as a bread and butter type of strategy. And at the Dorian Trader and in my hedge fund that once again that I ran for a decade, I used options on futures primarily because they have not only a better margining system. Yeah, you can have portfolio margin with stocks if you're trading options on stock, but most people don't qualify for that. You have to have a certain account size. But everyone qualifies for what is called span margin that is used in the futures market, and it's a dynamic type of margining system. It's not static. So what I mean is that if you put on a spread, you're not going to have to hold your max loss until you take off the trade or it expires like you do when you're trading regular T margin that everyone gets if they ask for a margin account when you're trading options on stock that's regulated by the SEC. Options on futures or the futures market is regulated by the Commodities Future Trading Commission. So literally it's a different regulator and they have different rules. So you have things like dynamic margining and no PDT rule or day trading pattern rule. And you just have so much more flexibility and a lot more leverage on your trades. That yes, if you have more leverage, you have to have more responsibility. And we teach people that at the Dorian Trader. But options on futures is something that most retail investors or traders do not know about. And at the Dorian Trader, we trade options on futures a great deal. And obviously we trade options on stock. But once again, in this video, I want you to understand the power of a swing trade between 30 and 60 days. So what we're going to talk about is if you had a $10,000 account. Obviously, if you have a $20,000 account or $50,000 or $100,000 account, $1 million account, this can still apply. But I want you to know that you can make a significant amount of money, percentage-wise, and some people it'd be dollar-wise, with just $10,000.
Please subscribe to our channel.
So let's break down what we consider a bread and butter type of swing trade. I'm going to pick between 30 and 60 days. Okay? I'm going to give you the framework in this video, and it's going to give you something to kind of research or start to apply yourself. But I encourage you to consider joining the Dorian Trader and learning from us, right? Learning from us, learn to make a consistent amount of money on a month over month basis that can significantly change the supplemental income that you receive, or potentially become your primary source of income if that is your aspirations. We can teach you that. We even have a program at the Dorian Trader that if you give us 12 months, you meet with me one time a week for 1 hour for 12 months. Now imagine that. And you get all the things that are included in our trading club that we meet every day, basically morning, afternoon, and evening that you can learn from. But you also meet with me on a one-on-one basis. You can do that process. And if you can't learn to be a successful trader, even if you've never traded before and you're new to the markets, if you don't learn, then we fail on our teaching challenge and we'll give you half your monies back. And so go to our website. It's the link will be in the description area. Go to our website, check it out. If you got more questions, you can email us. But I want you to understand that when we do videos and when we teach, we try to give people things that they can actually use and apply. So if you're doing a bread and butter strategy, you're going to start off between 30 and 60 days. So in this example, we're going to choose 48 days here. We're going to choose 48 days. And as I indicated earlier, when we're doing a bread and butter style, we're trying to do a put spread or an iron condor. Yes, you can do a call spread as well, but most of the time at the Dorian Trader, we're doing a put spread or an iron condor. So you have 10K. That's how much you have. You have $10,000, and you want to put that to use doing this swing trade type of style. So at the Dorian way, we have a certain range that we initiate at a delta range, because delta can indicate your probability of success. So in this example, I'm going to go down and we're going to sell the 40-40 put, which is a 7 delta, right? The 7 delta, and we're going to buy the 39.60 put. So this equals a put spread. Hey, a put spread is bullish. So this is a bull put spread. You want it to go up. But if it goes down, you can still win. So it's a directional trade, but not a traditional type of directional trade that you actually need it to go in your direction for you to win. If it doesn't, you lose. In this case, this is a put spread that your short strike, which is your risk strike, where you start losing at, is darn near 400 or more than 400 points away here, 444 points away, as you can see here. This is significantly far away from where it's currently trading, which is the last price of the ES that traded on Friday. This is a Saturday that we're doing this video, but the concept still applies even though the futures market is not open. That's one of the benefits as well about a futures market, is that if you have a full-time job, you can trade these options on futures. We have other videos on that. Check it out. But the futures market trades from 5 p.m. Central Standard Time or 6 p.m. Eastern Standard Time on Sundays to 4 p.m. or 5 p.m. Eastern Standard Time on Fridays. So it trades every day except a Saturday. You can literally trade something in the futures market every day except a Saturday. And it trades at night. It's not like the regular stock market hours, which you can't trade at night. The options on futures you can trade at night, and you have a tax benefit, what is called 1256 tax treatment or contract treatment. You need to check that out. I'm not going to discuss it too much in this video to keep the time frame of this video within a reasonable amount of time. But this is the put spread. It's a bull put spread. When you're trading the ES, it's not $100 a point. And it's not just like when you're trading options on stock, it's standard per point equals $100. So this spread right here would be an 80-point wide spread. So that means it would be $8,000 potential loss that you can have, right? So it's 80 times 100. So 8,000 potential loss you can have. But with options on futures, it's $50 a point. It's $50 a point. So the max you can lose on this is 4,000 minus the credit you received. Right? So this is why TastyTrade down here has this as 38.57. Okay, the most you can lose on this is the 38.57. Now, what I also want to point out is that the buying power on this trade right now is saying $67. So on this spread, which is 80 points wide, and it's $50 a point, so the max you can lose is 4,000 minus the credit you say that you receive that we just pointed out. The credit that we're receiving is $142.50. It's not this 285. Okay? But the buying power that they're requiring us to put up on this trade right now is $67, even though the max loss is darn near $3,900, as you can see here. As I stated before, span margin is dynamic. It's not static. It changes. So, and it's based on your portfolio. It's the original portfolio margin. So whatever you have in your portfolio could offset the buying power. So if your overall portfolio is considered mostly bearish and you're going to do something that's bullish, like this trade here, then it could actually give you buying power back or require just a little bit of buying power. As you can see here, it's requiring just a little bit of buying power. So in your account, it might be different if you do not have anything on. We have several things on in this demonstration account that we use at the Dorian Trader. So what we're going to do is disregard this $67 for now. We're going to say it's $500 per contract. Okay, $500 per contract. So if you had $10,000 and you held this to expiration, which we don't recommend at the Dorian Trader, we usually want to take something off about 15 days or so to expiration. But let's just say for simplicity purposes, you're going to hold this to expiration so you can kind of see the power. Well, this would be about a 1.4% return on your $10,000 in, let's say, about 30 days, because you're not going to stay in the trade the whole time. But even if you did, that's the concept we're talking about. So let's say you stayed in the trade the whole time, because that's the only way you'll be able to get this 142.50 is you stayed in the trade the whole time. So that's a percent, basically almost a percent and a half in 48 days. Not bad at all. Okay, not bad at all. So now if we add another contract, you'll see that now you're getting almost 3% return on your capital if you hold to expiration. Right? Okay, if you did up to 7 contracts, this is going to be, I just round it up and say $1,000. Right? It's going to be $1,000 that you receive, and you're going to have to use, let's just say $500 per contract, right? So you got the 500 times the 7, right? So you have the $3,500 that you have to put up for this trade, and you're doing 7 contracts. So you've just set yourself up with a 10% return in 48 days if this expires out of the money. And you have at least a 93% chance of winning at expiration on this trade, okay? Winning something, a 93% chance of winning. TastyTrade down here is saying you have a 97% chance. So you have a 90+% chance to win on this trade. And let's kind of emphasize that a little bit more. And let's do a percentage from at the money so you can kind of get an understanding. So when you do the percentage formula we teach at the Dorian Traders, we take the short strike minus the last price divided by the last price. So we take that 440 minus the 44.84 divided by the 44.84, and that's going to give us a 10% away. It's 10% away on this trade. And so that is considered a correction on Wall Street, or the kind of Wall Street terminology. 10% is considered a correction. 20% is considered a bear market. We're currently in a bull market because we're 20% off the lows of last year. So if we drop 10%, that would be in a correction. So we'd literally have to go in correction mode a little bit more than that, because the ES currently right now, as we record this video, is down about 2.5 to 3% from its highs. So it would have to go down even more. So you have this significant cushion. It would have to drop 10% from where it's currently trading to touch this short strike. So that's pretty powerful. At the Dorian Trader, we kind of give you a criteria of how far you should be away from at the money percentage wise, and how much money you should collect per contract, and what buying power you should use, and what return on your capital you should have. All of those type of criteria. I'm not going to give you all that information in this video, but I'm trying to set it up for you to understand, even if you had a $10,000 account, how you can literally supplement your income with a super high probability of winning, being able to do that on a consistent basis. You're not going to win 100% of the time, but you can be in that 90+% of the time of winning with these type of trades, this swing type of trade. So this is the put spread, and you're using about $3,500 of your 10,000. Right? You're using about $3,500 on your 10,000. The other capital that you're sitting to the side, that's just used if you have to make any adjustments or issues come up. You have all that cash to the side. Right? So you don't have to use your whole $10,000 account to be able to make 10%. You shouldn't use your entire account, only a small portion of it when you're trading options the way we teach at the Dorian Trader. So if we turn this into iron condor, let's say we decided we were going to sell the call side at the 48.20 at this 5 delta. The put side was a 7 delta. We're going to do the 5 delta on the call side. And let's keep this 60 points wide. Let's do this 60 points wide on the put side. It was 80 points wide. Right? So let's do this 60 points wide here. And so we have what is set up as a skewed iron condor. The width of the put side is larger than the width of the call side, and the delta on the put side is larger than the delta on the call side. So this is what is considered a skewed iron condor, but it is still inherently neutral. All iron condors are inherently neutral, right? You want it to stay in between your short strikes. So our short strike on the call side is the 48.20. Our short strike on the put side was that 44.40, and you can see that down here. All right, so this is the iron condor. And you can see that now the buying power in this account, because this account is for primarily short, the buying power is showing up correctly now. So this is using about a little over $3,900 in buying power. But for simplicity purposes, let's say it's using 4,000 of the $10,000 that you have in your account. Right? So you're using 40% of your account to make, in this example here, I just rounded up to 1700, to make 17% if this held to expiration. This held to expiration, you made 17% in 48 days. So it's a number of people out there to try to make it seem like you can only make a huge percentage if you are a day trader. That is not the case. You can make a significant amount of money doing a number of different styles, not just day trading. This swing trade, 30 to 60 days, can be life changing. Can be life changing. Is it easy? Absolutely not. If you can take monies from the market on a consistent basis and make it your primary source of income or a secondary source of income that is significant, then it's not going to be easy, right? But if you have the desire, if you have the discipline to learn, you can do it. I believe anyone that has a true desire to be a trader can at least learn to supplement their income at a significant level and consistently. But you have to put in the work. It's not an overnight process, but you don't have to go back to school for 4 years. We're not advocating that, but it's a lifelong process of learning. You will continue to learn as you make money, as you make money. So $1,700 off 10,000 if you held this to expiration. At the Dorian Trade, we don't recommend that. We would have you take this off at 50 to 75%. So once you are up 50 to 75%, you ring the register and you move on. Right? That's allows you to reduce the risk of the overall trade, get out of the trade soon. Right? And then we also at the Dorian Trader, we have what we call a 15-day rule, where you get out of the trade when it's about 15 days to expiration, so you can remove the gamma risk that's associated with short-term trades. Unless that's what you want to do. Like I said before, we do teach short-term trade and we do it all the time. But my favorite trade, my personal favorite type of strategy is a swing trade, 30 to 60 days. You can make a ton of monies. And if you understand how to adjust, you can adjust this and win at a huge percentage level, right? 80, 90+% of the time you can be winning. And when you lose, you just want to lose a small amount, and then your account will continue to grow. Okay? And you'll be able to do this full time, or most likely supplement your income in a significant way. So if you want to learn more, please subscribe to our channel. Please like the video, leave a comment, consider joining the Dorian Trader. But at the very least, please hit the subscribe button. It doesn't cost anything to subscribe to our channel. Learn from us. Support us that way. We're trying to grow our channel to at least 5,000 subscribers, and we're quite a distance from that. So if you can support us, we'll appreciate it. Most people that look at our videos are not subscribers. So if you found value in this video and you want to learn more, please hit subscribe. We'll appreciate it. With that said, thank you for watching this video. We hope to see you in the next one. Bye for now.